The Dow closes up 200 points after Supreme Court probes Trump tariff argument. AMD sparks an AI rebound. That's a little bit too bullish for that AMD move that we got today. It was a nice bullish engulfing green candle on yesterday's red doji, but we're still pulling back. And NVDA had a really ugly downturn midday, making a lower low on the day and on the previous day. Market is still in a danger zone of pullback and a stress test and some form of a correction. I'm going to take you into the SPY, and I'm going to show you what an island candle pattern looks like and what it might mean for how far we're going to pull back. I'm going to give you guys some key support levels on the SPY. How could you use these? Well, these are areas where we're going to be watching carefully for a bounce. If we get a legitimate bounce there, well, then that could encourage a potential move higher on the markets. But if we flush right through those key levels, it means we're going down to the next level. And I'm going to give you 3 levels on the SPY today. Mixed results out of big tech. Winners and losers. Google and Tesla had a beautiful day pushing higher while we saw Microsoft and NVIDIA still rolling over. And a lot of people have been asking me about Meta. Is it safe to get back into the Meta waters? The answer is I think there's blood in those waters, and we need to be careful. I'm going to just highlight some things I'm looking at Meta regarding. I don't have a November pick for you, but I do have a hot stock that I'm going to lay out for you right now in this video that I think will be higher tomorrow. I'm going to give you a target to the upside of an outlier. And what is that, an outlier? Well, when the markets are pulling back and the higher risk plays are unwinding, you got something that's pushing higher with a really, really strong green breakout candle. It's going the opposite direction. That's why it's called an outlier. And I think this is one that's worth watching, because when the markets do decide to turn around and go bullish again, that outlier can go much higher than the rest of them that had been falling. So we're going to check out a new stock today I haven't talked with you guys about today. I know some of you guys will have been in it because it's a popular stock and it had an absolutely breakout move today. And I only have one condition, one small condition on the chart that I would like it to meet for me to buy tomorrow. And I think it's a pretty easy condition. I think this thing is going to continue higher. Welcome to Wall Street. This is the Stocks with Josh show. I just want to take a minute and thank you guys, those who drop a heart and leave a comment for me. It feeds the algorithm. Hit the like as well. And if you need help trading these choppy waters, predicting the markets and finding good plays that have potential to move to the upside, hit the like and the subscribe. I have a pro trading community called ChartGoat University, and 5 days a week in the morning and a couple days in the afternoon, we live trade as a community. So there's always a session to join each and every day where you can trade along somebody who's been doing this a while, someone who's been in the arena and been a proven winner. And I got to just comment on our session today. Me and Mike, I like to call him Money Mike, we led the Wednesday's session. I gave everybody an NVIDIA call to the upside. He gave everybody a Google call to the upside. Both of them printed, and we all made a little bit of money. Come and join. It's not always winning. Not every alert is a success story, but we continue to refine and grow. We have a plan. We exercise patience, and we use discipline. I'll quickly shout out my disciplines for those who are brand new to the page. You want to trade the trend. What is the trend right now? Well, the macro trend is still bullish. We haven't broken down below a lot of the major moving averages. However, the micro trend is clearly in a pullback. Discipline number 2, you got to use a stop loss. And any stock that I talk about on this page, you got to know that I have a stop loss plan, and you'll see those stop losses on the charts when I show them to you. And you don't want to ask me about it a week or a month from now if it hasn't been continually going up. More than likely, I've used my plan and let myself get stopped out. And then the last condition is to control your position size. It is an age-old story to see people come to Wall Street that get involved. They see or hear a story that they like. Retail loves to trade stories, a new technology, a new innovation, an up-and-coming company. The problem with those up-and-coming companies is they've got no revenues. They're not growing market share. They need money, so they dilute shares. And so you need to control your position size. So how do you apply that, Josh? Well, small cap, small position size. You need to have more of your money in a long-term portfolio because Time in the market will always beat timing the market. I hope that makes sense. And then my last discipline is don't overtrade, don't revenge trade. You're not going to be able to make up for a mistake by putting more at risk. Those are the disciplines, guys, and they've worked well for me and for those who've followed me. Sometimes it's not even the hot trades that I give people. It's my insistence on looking at the plan. What is the plan? And what are the disciplines that have turned investors around at that, and teaching the charts. Every single one of these videos is always going to be a class on the charts. I love the charts. I've got passion for the charts. I believe price is truth. The charts lead the way. So if you want to join my pro trading community, go to www.stockswithjosh.com. It's the same name as the show. That's the website. The SPY. Let's talk about what's going on with the SPY. I'm going to take you in there and I'm going to show you something we've talked about before, but when you see it with your own eyes, then you can potentially become a believer of what we're going to get next. There's two things on the SPY. One of them is a cluster of island candles. The other one is an ascending channel. Ascending channels, by nature, when they break to the downside. Almost 80% of the time, an ascending channel ultimately breaks to the downside. And right now, we're inside the channel. We recently tested the top. We're going to come back and test the bottom. And if that holds, well, then the bull story continues into the end of the year. And we climb, and just soar to the heavens and move entirely away from the magnetic draw of the moving averages. Not quite likely. So we're going to look at that channel and we're going to look at its implications on price. And we're also going to talk about these island candles. What are the island candles? Island candles is when the market gets so bullish at the top of the run, it jumps and it forms a little cluster, but then it gaps down, leaving that cluster of candles up at the top all alone like an island. This is a very bearish pattern, especially when you see it at the top of a move. It means reversal. So the stakes are high. Let's go look at the SPY. So this is the long-standing channel that we've been in for quite a while. And you can see that I've often say that the top half of a channel belongs to the bulls, the bottom half belongs to the bears. And you can see that this has largely been driven by the bulls, every once in a while tested by the bears, only for us to see it recover quickly back to the top half and for the bull run to continue, making the theme of 2025 buy the dip. But as we move in closer here, we see that we got this cluster of candles right here that are an island. These are the gap ups right here. And recently we've gapped down, and the threat is the move for us to go to the bottom of this channel. Right now, I also want to highlight these strike prices that I have on the right side. Don't ignore them. These will guide the way. They're principally driven by an area of support. You can see here on the right, we've got the volume range visual profile. Those are the bars. The thicker and wider the bars, the more transactions and potential support in that area. So right off the bat, there is a possibility, even though I would say it's somewhat unlikely, that we could hit this 672 and bounce. I would expect us to react to this 672. However, if we cut into it, then we're going to be moving down and testing these lower levels. These are the levels. This will be one of the last levels where the market could bounce before a more serious downturn, 662. And what that level does in particular is it draws attention to this point of control, this previous bearish red engulfing candle that had been a check on the markets. If we lose the majority of the size of that candle, this is where we had fought it out and pushed higher. Basically, we create a much bigger neckline down here to 653, and that would be the bottom. And this area has been tested a number of times, and this would be the last area where I would expect a bounce. Very likely we'll get a bounce at each of these levels, but I don't think it'll be sustained. Ultimately, I believe that we will continue down until we ultimately test this 653. I obviously do think that island pattern on the SPY is not good, but there's no panic selling right now. The market is simply doesn't have a great reason to rocket higher. Over the last number of months that we've come up off of April's lows, it doesn't have a great reason to buy heavy right now. And there's more of a desire to lock in gains in case there's more unpredictability or uncertainty around the corner. The next catalyst is going to be obviously NVIDIA's earnings, but I'm not sure how much that can sustain the current move. I think we've got to test some levels below. Let's briefly talk about Meta. Now, Meta is one that you want to be, I can't tell you what to do, but Meta is one that I want to be in. And I don't want to miss the turnaround story because I believe that Meta is going to continue to be a winner in 2026, 2027. I like something that Mike said, Money Mike, in our live trade session said this morning. He said, you never want to ignore a blue chip stock beneath its 200-day moving average. And that's what we've got with Meta right now. Let's go look at that chart. So let's just look at this more recent time in which we dropped beneath the 200-day moving average. This was back here in April, and we didn't spend much time beneath the 200-day moving average. We spent about 2 weeks here, but then after that, we had an explosive move higher, going from a mid-average price of around $515 all the way up to almost $800. And so, again, whenever you get a blue chip stock under the 200-day moving average, you don't want to ignore it. Now, you guys can see that I've drawn a bullish descending channel. Even though the price action is descending, these often reverse and eventually break to the upside. And so that's what we're going to be watching for here. We're already in a potential buy zone where we could buy the next 30 days on Meta, waiting for it to recover above the 200-day moving average. Let's just go back in time and look at some other times when it was beneath the 200-day moving average. Now, this was the big one in 2022, and it gave a lot of clues that it was going to be a little bit of a bigger move down because it fell beneath the 200-day moving average, and it basically moved back and forth, ultimately rejecting after a month and made a lower low. So this would only be the case if we were heading into a recession, and we would have a lot of clues that this was going to fail based on its attempts to get back above the 200-day moving average. The rest of the time, you can see that when it dips beneath the 200-day moving average, like right here, it's an incredible time to buy. In this particular instance, it was here for about 6 weeks. But again, it went from around $155 all the way up to $300, a 100% gain. To be very clear, I believe that Meta has not come back enough, and it hasn't tapped the bottom of that descending channel that I've drawn. I also think it's a bit early. We've only been under that 200-day moving average for a couple days, and normally it takes between 4 weeks and 6 weeks of chop underneath that 200-day moving average before we blast back above and go on a new long-term move. And so I would say that it's worth looking at Meta very seriously, but it's also something to be mindful for. Get your strategy, get your plan together, but don't buy the very first red candle under the 200-day moving average. But you could nibble on the first candle. All right, the last stock that I have to highlight today, and I'm going to keep it quick because I don't want this video to be too long, and that is Lemonade. Let me just take you into a news story which recaps its recent success. So Lemonade on pace for highest close since September 2021. Now, this is a change of character, a breakout. Lemonade is currently around $77. It would be the highest close since September 2nd when it closed at $79. So this is a huge return back to 2021's top. It's on pace for its largest percent increase since November 2nd, 2023, when it rose 47%. Currently up 3 of the past 4 days. It's on the move right now. It's up 112% year to date. Now, this had been down nearly 60% from its all-time closing high of $183. It's up 166% from its 52-week low. Now, what I want to highlight to you is that this thing couldn't be held back when the rest of the market was pulling back. So this is why I called it an outlier. And instead of chasing stocks, which might be a bit too early to get into, some of the big techs that we know and love, we got to let them cook to the downside. Let's go look at something that's working right now. And I'm looking for just the smallest pullback tomorrow on Lemonade to go at it again for an additional move higher. I'm going to give you a target. I'm going to keep it simple. I'm drawing it to your attention. Spend some time charting it yourself. Don't rely on me. I'm not a financial advisor. This is not a suggestion for what you should buy, sell, or hold. You could lose all your money investing on Wall Street. Let's go look at the Lemonade chart. All right, we're looking at weekly candles, and just like that news story said, it had a recent breakout of some structure. It's inside an ascending channel right now, moving higher. And as I've said many times, the bulls own the top side, and we've broken through to the top side. Ultimately, I think this is going to continue to chop and flag a little bit and get up into this $95 to $86 target range. And I think that we are going to see some resistance right there, but I wanted to draw it to everyone's attention. What am I looking for this to do tomorrow for me to take a little piece of this pie? Well, I just simply want it to come back and hit VWAP and bounce again. Let me show that to you before we head out of this show. So you can see based on this chart what an incredible move it had today. And it really didn't sell off after we got into the end of the day. It just really began to move sideways. This will bring the VWAP up tomorrow. I'm hoping for a little hit of the VWAP and a continued move higher with the target of $86. Now, we don't have a stock pick for the month on tap for everybody to look at. What I've got for you is Lemonade looking bullish tomorrow and maybe even through the end of this week. Check it out. Let me know what you think. Just trying to keep the folks fed. And every day when we're in the Stocks with Josh Discord, we have live trade sessions, and I'm not going to say much more to you but that these have been winning sessions. And that's the reason why people are in there. It's the reason why that community has been growing. And I hope that you take a minute to check out the website and see if it makes sense for you. It's definitely a place where you can come and learn from folks that have a deep passion for the charts and believe that that's where you're going to get the confidence to take risk positions on Wall Street is by following the charts, not guessing, not trying to get ahead of them. Peace and blessings, my friends. Hit that like and subscribe. I'll see you in the next video. Let me take a quick station break to tell you about the Moomoo investment app. If you're looking for better trade tools or you just want to get more out of your broker, check out their latest offer. Right now, Moomoo is giving new users up to $1,000 in NVDA stock just for making a deposit. And any idle cash you put into the account, you can earn up to 8.1% annual percentage yield for the first few months and 4.1% after that, which is still higher than most banks. This offer is only available for users in the United States and only available for a limited time, so hit the link, check it out on their website, read the fine print, and see for yourself.